Well, hello, everyone. Thanks for joining us today for our Silicon Heartland online series. I'm Rebecca Fannin, and I'm running the show today, along with my partners here, Will Allen and Zach Malone. So say hello to Will and to Zach, who are joining us from Pittsburgh, and I'm in Silicon Valley today. So please be signing on as we move along and enjoy the show. Silicon Heartland is a new journey for me into the Midwest and writing about how the Midwest is transforming from Rust Belt to Tech Belt. Some places were fairly rusty and others were not so rusty, but some were very rusty. But anyhow, we explore many of these cities in the Heartland now, including Pittsburgh, including Cleveland, Columbus, Cincinnati, Morgantown, West Virginia, Indianapolis, Tulsa, and Louisville, many of the cities that were on my Silicon Heartland book tour. And you can see the map here of all the places that I visited on the book tour itself. So that was for the research. And now we'll be out there in the market holding events in each one of these locales with the venture capitalists and the entrepreneurs from each region. So I'm excited about that, to get back out there in these locales and pull this community together. I've been at this for quite some time as a journalist and author, and mostly in Silicon Valley or in Asia. I produced 3 books, and now the 4th one. The first one was Silicon Dragon, 2008. Which was about China's tech rise. Nobody believed it then. I was early on the frontier, and I'm early again with the Heartland. I also wrote about India in Startup Asia. Then I went back to China, Tech Titans of China, to talk about all the grown-ups that had emerged from the China tech scene. Now, I think we're on the verge of seeing this in Silicon Heartland, and that's why I'm excited about writing about it and reporting about it and holding these shows with the people who are making it happen. And right here today, we have 2 people who are on the front lines making it happen. Partners Will Allen and Zach Malone. I first met them in Pittsburgh at their office in downtown Pittsburgh. And that was quite some time ago, but here they are. And hopefully you can see the slide here of photo I took of the partners at their firm in Pittsburgh. So I want to introduce a little bit about the firm, Margaret Venture Partners, otherwise known as MVP, or MOBI, Most Valuable Player. I don't know, maybe that's the whole rationale behind it, but I like that. It was established in 2021. I grew out of Draper Triangle, and I knew Tim Draper and the whole crew from Silicon Valley and their whole extension of the Draper brand in many locales. So now MVP has raised $50 million toward a $150 million fund. It's an early stage venture capital firm investing in a lot of tech areas that are hot, like robotics, AI, machine learning, medical devices, autonomous driving. And we get to hear a little bit more about those deals as we move along. So now let me introduce Zach Malone, who I met and who has been very helpful on this whole journey. Zach, why don't you say hello to everyone, and we can talk a little bit about your background, and then we'll talk a little bit about Will Allen's background. So Zach, here's a little bit about you here, and why MVP, why Margaret now?
Thank you very much for having me, Rebecca.
Sure.
I super appreciate it, and thanks for everyone for joining. Yeah, brief background on me. I'm not sure how much detail to go into, but ultimately, why MVP or why Draper Triangle is rooted in the belief of the Midwest is probably one of the fastest growing markets in the world as far as with startups, and we believe we're uniquely positioned to help those companies grow and scale, and we're excited to do so. And that's really what we're looking forward to. It's okay. It's a different kind of game here, but it's one that, personally, I don't know what else I'd do. So I'm really grateful to be here.
Okay. All right. Excellent. So there you have Zach, quite a background here. He was at Draper Triangle Ventures for many years too. He's the board member of at least 7 startups, right, Zach?
That kind of comes and goes, but yes, I joined Draper Triangle in 2011, which is kind of the precursor to Macroac Venture Partners, or MVP.
Right.
It was an interesting time. At that point, there weren't a lot of firms focused on the Midwest of the United States, and it's been great to see more come online and more activity happen. And we're happy to be a part of it.
Good. All right, Will. There's a photo I took of you that day in Pittsburgh at the office. And I like that photo because it kind of shows your athletic grace. So of course, Will is very well known in the football world, a star player of the Pittsburgh Steelers and also the Tampa Bay Buccaneers. But he's also an angel investor and a board member, and he's running the Will Allen Foundation. He's from Ohio, like me, and he also OSU, bachelor's MBA at the University of Dayton, and he's very well schooled now on the executive education side too. So Will, welcome to the show. Would you like to say a few welcoming remarks to everyone?
Yeah, sure. Thank you everyone for being here, and hopefully we can provide some valuable insights and information around, what we're doing, how we invest, the Midwest, and how we want to support, exceptional founders. We believe in the thesis and mantra that great can come from anywhere. And you look at the Midwest and the opportunity where we sit in the ecosystem, the ability to write checks between $1 to $3 million. That's incredibly important to founders that are growing from the early stage, from convertible note and safe rounds to trying to get to the proper seed or proper Series A, and grow their companies beyond. So we're excited to share information and valuable insights today, and hopefully we can even come out with a few deals out of this. So we'll see.
Okay, good. Well, I know we're going to be hearing from a number of the people who are on the online audience, and they can ask questions through the chat. So I just ask that you make your questions really relevant for Zach and Will, and on the topics of tech investing in the Midwest and Pittsburgh. Try not to make them too self-interested, but we welcome your questions, and we will get to them in a moment. So a little bit about the Pittsburgh scene. So right now, it is a rather shallow venture pool compared to the coast. Of course, we've seen that Silicon Valley has about half of the venture capital spending in the US, followed by New York and Boston at second and third. There are other markets that are coming up, like Austin, Texas, as we know, and Pittsburgh too. There's been a lot of growth in the Pittsburgh scene over the past decade. There's been coastal firms that are now entering Pittsburgh from the coast, even from overseas, like SoftBank, Bessemer, Graycroft, Warburg Pincus, General Atlantic, Sequoia, making their first investment in the city. And that's a very encouraging sign. I think the reason they're coming in is they recognize the talent that's in Pittsburgh from CMU, University of Pittsburgh, the companies that are already there, such as Amazon and Google and Facebook, and just the talent around AI and robotics and a lot of these areas that are really hot right now. So I like this saying from your firm about genius may be evenly distributed, but opportunity is not. So your firm is all about evening out the opportunity and creating a new startup from the Midwest that can, have a lot of traction and scale up. So now I'm going to stop these slides so we can actually talk with one another a little bit more. And then we can welcome some questions too. So get your questions warmed up. I'm going to be getting to those in about 5 minutes or less. If there are a lot of questions, I'll get to them earlier. Right now, I only see one question, but please line them up. Now, do you agree, Will and Zach, that the venture capital pool is shallow in Pittsburgh? And if so, what can be done about it?
Well, maybe I'll kick this off. And Will, yeah, appreciate when you add your more insightful comments on top of me. But yeah, I mean, I don't believe with Pittsburgh specifically, I don't think there's anywhere else in the country where there's more opportunity and less capital available for what it's worth. You know, I mean, but just take Carnegie Mellon. You know, you don't have to calculate with Pitt and the other universities around here, Duquesne. You know, we probably export more talent than any other city in the country. So it's there's certainly a huge gap in terms of capital available locally to invest, which is always important given that, you know, a lot of times at the earliest stages, you need those direct personal connections, right? For a seed stage company, you're investing based on, you know, the people you believe in more so than the financial model or the traction. As companies scale, it's easier, but, you know, early on, you need to have people that are geographically close. And yeah, I think it's, you know, a great opportunity along with the rest of the Midwest. You know, there's cities like Columbus that are growing very rapidly, and you know, they're going to have a giant impact on the overall technology ecosystem in the U.S.
Right. Well, that's one of the things I noticed in researching Silicon Heartland is that Columbus is 15% population growth in a decade. It's amazing, right? Followed by Indianapolis, the second fastest growing city in the Midwest at 10%, almost 10% increase in the last decade. So these two markets, Pittsburgh growing very slightly, but you know, Pittsburgh lost a lot of population when the Rust Belt factories left, and people, you know, they left because there were no opportunities there. So now what we're starting to see is firms like your firm investing in new technologies that can help to revitalize the whole economy. So Will, let me ask you about that. You've got a good perspective as an angel investor and also a partner now at Magarac.
Yeah, I think that, you know, to back up what Zach was saying, we got a great technology, talent pool here, and we have to provide capital. But, you know, we look at all over the Midwest, right? To your point about Columbus and Indianapolis growing, you know, Cleveland, you got Milwaukee, Kansas City, and Chicago. You know, it's you know, like that's why we say great can come from anywhere. And you know, we want to provide opportunities to let that greatness flourish. So although we're bullish on Pittsburgh and CMU being the #1 artificial intelligence university in the world, and also, you know, a lot of the creative talent that is deriving out of there. You know, we can go right in our backyard, which is great for us. But we have to do a better job at the connective tissue and funding companies, and funding these opportunities. That's our job, and that's what we're here to do.
Right. Now I understand that you've invested in some deals where we've had co-investment from Sequoia and Tiger Global, which are two major firms. Tell us about that deal.
Yeah, you know, as an angel investor, you know, you want to get close to the talent, like, you know, Zach mentioned and that I just mentioned. And so I pride myself on, you know, scouring and being close to some of the best investors in the world. When you talk about 776 and, you know, First Round or, you know, Tiger or Sequoia. I mean, historically, they've had the largest AUM, they've had the largest returns, and, you know, they're in the top 5%. So whenever you can get that type of deal flow or come in early, and then that founder attracts that type of investment from those firms, you know, you've done something right. So I think, you know, most of the deals I've done were early in stages, and, you know, working with those founders and even making connections to some of those firms. You know, whether they have been, you know, a much larger firm with greater notoriety, or they've been some local firms here. You know, that's your job as an angel. You know, you either come with domain expertise, relationships to help fund, or operational expertise to understand the business and the operating model so that the company can grow. And so that's something I just did. So it's just, you figure out if it's a good fit, you come up with a thesis, and you just go from there. So one thing that I said I wanted to do before joining an institutional investment firm was, you got to get reps in. How do you know you're good if you don't get reps in? How do you know that you can even, go after it if you don't? So that's something I wanted to do. I still have a lot to learn. I'm still growing, but and that's what I look for in founders. Like, tell me about the research, tell me about the time, tell me about the reps that you actually put in to validate, this thesis around this business you want to grow into something extraordinary. That's very important. And if I don't hear that, then it's really tough for me to say this is a go.
Sure. Now, are most of your deals in the Pittsburgh area, or where are your deals?
Yeah, no, they're all over the country. I have a few in Pittsburgh, Metaphy, IRA Logics. Metaphy was backed by 776, was backed by Tiger and for their Series A round, Forerunner in their seed round. And then I connected them to M25, which is a Midwest investor, and they're early in their pre-seed round,
Right.
and a couple other angels that I knew. So, that was one way to help. And IRA Logics is a, IRA platform for, any insurance and IRA companies. So Morningstar just led their Series B round, I believe, with a significant investment. And, I got in at the early stages when they were just doing a convertible note. So, that was 2 deals, and I've invested in some companies in Texas, in Dallas. I've invested in companies gig wage. I've invested in some companies in San Francisco, all over New York. You got to be close to where the opportunities are and where the best founders are. So.
Right. So what does the Pittsburgh scene need to be more on your radar?
I don't know. I think the Pittsburgh scene is really good. We gotta take more risk. And I think I think the nature of this city, and I think the nature of the Midwest is risk averse. A lot of people have made their money in real estate, manufacturing, and industry, and banking. That they haven't really taken a swing for the fences, or they haven't had the spillover of having these successful wins, and now they're like, all right, great, let's put it towards venture capital and companies that can transform the world. And that type, we need to start doing that. There's a ton of money here, family money, family offices. We have a third of the Fortune 500 companies all across the Midwest. So there's a ton of corporate money. There's a ton of old money across the Midwest, and it really all started in Pittsburgh. Like, if you want to go back to the the iron and oil days, Pittsburgh and north of Pittsburgh started the oil refinery and oil business as we know it. Carnegie Mellon Andrew Carnegie made his first investment there. Rockefeller, did his refinery business out of there. Like this, we are the epicenter of the world, and how the world was created from iron, steel, and oil and refinery infrastructure. And now we have an opportunity as it relates to tech to really take over with, we got 3 of the top universities in the Midwest, top 10, as it relates to artificial intelligence and computer science. So the talent is here, the capital's here. We just need people to get over that hump of being risk averse, and putting more capital to play.
Yeah, it's a confidence factor. Like, yes, we can do it. Like in Silicon Valley, you hear people, walking down the street, they're all talking startups. Oh, I pitched this person today, or my first startup failed, but now I'm on to my second startup, or my third startup. It's all part of the whole culture, and that hasn't really matured like that in the Midwest. It's early days, and so that's what I like about covering it as a journalist, because I like frontier markets. That's where, to me, the action is. And I love companies that are being created in this kind of environment, like Zach, your deal, Locomation, and I love that name, Locomation. Tell us about Locomation and why that deal is particularly hot.
Yeah, absolutely. It's a great representation of the way we kind of look at our investment thesis, right? Where we try to focus on companies that have really strong organic talent in the region, right? I mean, I hate to say this because there's great businesses like Duolingo that are building kind of social media type opportunities, but those are sort of the outliers to some extent. Companies like Locomation, it's based on really the core talent coming out of CMU. AI, robotics, autonomy, these are world-class individuals building a company that could be around for 100 years and really help change the way that, everything, not just from the way we commute, the way we transport goods, but, what happens with real estate whenever you have autonomous vehicles everywhere, what happens with, things as simple as, car insurance, right? It can really disrupt the whole world and leave a positive impact. And, it's been a privilege to work with that organization.
Yeah, this trucking company basically with autonomous driving and the relay system. It's very cool. And the two Turkish brothers who have PhDs from CMU are behind that, are the founders. So that's one company that I think is really poised to make a big impact, and probably already is as it's rolling along on the highways. Okay, let me see what kind of questions we have here. Here's a question from Silicon Valley, a very expert investor, Hal Kelman. Thank you for your question, Hal. What vertical area of SaaS do you invest in? Okay, what vertical area of SaaS do you invest in?
We're generalists by intent, so we don't have a specific vertical. As long as we know that the fundamentals of that SaaS business is strong and it has great market demand pull, and the founders have some, again, unique and valuable insights on how they want to develop their business and operating model and their team, and we can support that and do that. I like to say we really look for exceptional talent, and it's about our job to know what we're looking for and what we're looking at. So based on the history of, the prior history of our partners and, what we've had and experienced, we have an internal kind of model and sweet spot on, what those metrics and what the talent should be producing. And, but we also have to look for outliers. We want to have, some unbelievable freakish talent that just shows up like the Locomation folks, right?
Yeah.
So, you got to think about that and also know kind of where the world is going. And that, again, that's what it helps us to, have CMU in our backyard. When you think about where the world is going, thinking about AI and data, we know, that's a vertical, but there could be SaaS business models in different markets, that we have to have understanding on, but we also have to listen to the market and listen to founders around that. So there's, we're not, super focused on one SaaS vertical. We want to partner with exceptional talent and freakish talent.
So Hal, 2 weeks ago, I think you were participating in that show. We had the venture capitalist from Indianapolis who sold his business to Salesforce and then set up High Alpha Venture Studio, and he's backed dozens of SaaS startups out of Indianapolis. And Indianapolis is a SaaS hub today. And that's one of the takeaways I have from Silicon Heartland, is that each market has its own specialty. For instance, Cleveland is very strong in biotech, and Cincinnati is strong in packaged goods. Columbus is strong in health tech and insurance tech. Detroit, autonomous driving and electric vehicles. Pittsburgh, of course, AI and robotics. So each place has a specialty, and I think that's good because together this can really have an impact nationwide as a Silicon Heartland market. All right, now let me see. Here's another question. What kind of unique insights have you developed when working with medical device and life science startups approaching the FDA process and prolonged time to market? Yeah, that's a good question.
The only unique insight I have that is hard and is long and is capital intensive.
Yeah.
So I think there's no easy way around it. What we're looking for, right, is the smart people that can speed up the process. through AI, right? And looking at large amount of data sets and looking at historical evidence on how, drug discovery or drug delivery has happened and speeding up that process. There is this uniqueness that I'm starting to see in the market around how if I want to create a drug or drug discovery, if I'm an entrepreneur, I want to do it. I'm thinking about how that ownership of those clinical trials, the ownership of the clinical trials, right? So previously, if someone goes out and they say, hey, I'll volunteer because I have this, life-threatening disease, and I believe that this startup or this company that's in growth stage can help cure me, I'll sign up for a clinical trial. I'm one of 10,000, people of the sample size, but they do that. And then where does their data go? Where does their information go? Do they get any credit for that clinical trial, or do they have any ownership, right? Whether maybe it's commercialized, maybe it's not, maybe it's sitting in some drug bank, or maybe it's sitting on a shelf that some nonprofit owns. So how do we unlock this potential of ownership, but also how that can be levered or how it can be utilized in a different type of ecosystem that we've learned and seen, in Web3 through blockchain, right? Through blockchain technology. So there's some different applications here that we're just at the very early stages of understanding, and a lot of entrepreneurs are starting to talk to us about it. But you think about the behemoth of healthcare, drug delivery, drug discovery, and how slow moving the system has always been, and the billions of dollars that goes into it, but we don't get the same results as relate to acute care and really specific acute care. And it's really sad to see. So maybe how we utilize drug discovery, drug delivery, and the speed of it can help us better understand how we can get better results and better outcomes in drug delivery. So we're at the very early stages, but I mean, I don't know if that quite answers the person's question, but that's how we're thinking of it. As long as hard, capital intensive, how do we speed it up? How do we create different ownership structure? And how do we really can utilize the information and data with AI to increase better outcomes for patients?
Right. Yes. Yeah, definitely AI works into there. And how, so Kelman, circling back to Hal, wanted to know the names of the companies that Tiger and Sequoia invested in, the deals. What were the names of those? Those company names?
Yeah, I'm not sure about the Sequoia, but Tiger invested in Metaphy. They're a
Okay.
company out here. They're the founder is out of Pittsburgh, but they have a distributed team.
Okay.
Also 776 invested in that business.
Okay.
So that's how.
What does Metaphy do?
Metaphy is so it's like a gaming. It's a gaming marketplace where the world's like best coaches in the most popular games get to really leverage their skills and talents to teach people how to play and be better at games. And
Okay.
there was a bunch of other companies that out there trying to do it. And the founder that I invested in, his name is Josh Fabian. You can look him up. He has a bunch of TechCrunch articles. But that's really the wedge into a bigger problem that he's solving. So he's been exceptional at it, growing like crazy. He builds in public. So what he puts on Twitter, what Metaphy puts on Twitter, like you can read it, you can understand it, you can look at his growth metrics. And it's just been an incredible journey for him over the last 2 years, really. But that's the wedge. He's been able to attract the best talented, skillful gaming coaches in the world to be on the platform, and now they're delivering and leveraging their skills and talents as creators. So if you let that be kind of a breadcrumb into what can be next, and where the creator economy is going, because it's huge. And look at the vertical of gaming and other verticals. He's on his way.
Well, good. How do you find your deals? You've gotten into some really interesting deals. How do you discover them?
You want to answer that, Zach?
Sure, I'll try to the best I can. It's a great question. It's really the lifeblood of what we do, right? It's without great deals, there's not much that we can do to really change as far as creating returns for our investors. One of the benefits of the region we operate in is it's relatively small, right? I like to think of Pittsburgh and other similar cities as big towns, as much as, it's a much different dynamic than say New York or San Francisco, right? So really, like for Will and I and other partners, Jay and Mike, we're just out as much as humanly possible, getting to know as many people as humanly possible, and trying to make sure that we can really be the first stop for any founder raising capital. And that's not manageable in a city or a metro area with 5 to 10 million people. It is where there's 1 to 3 million people, and it's a relatively small, although high quality, but relatively small, pool of people starting companies. So our goal is really to become the go-to place and try to know as many people as we can in the region.
Right. I did notice that community aspect in Pittsburgh, that everybody seemed to know one another, and they seem to be helpful to one another as well. So maybe it's not so competitive. I mean, how is the competitive landscape in Pittsburgh for these kinds of people?
I'd say it's competitive and getting more competitive, but we have the unique benefit of being geographically located here. We're not flying in once a quarter or once a month trying to find opportunities. We're here. I grew up here. Will has very deep roots here, as well as Columbus and throughout Ohio. It's
right.
I mean, and you're right. It is a small town. You can pretty much ask someone, where'd you go to high school, and you're going to know 10 people they know at the end of the day. And there's negatives to that. But there's also positives when it comes to trying to access the best opportunities in the region.
Right. So, Will, how about you? Why don't you answer that question as well?
How do we get to deals? I think Zach, that's one part of it that Zach mentioned. The other part is the process. Is within the process, you got to be you have to have data analysis. You have to be looking steep into universities. We talk to our LPs. They have and they're strategic. And also you look at aggregates of groups and that we talk to, like, all over the country on how they look at deals and deal flow. But and also founders really, the founders we support and back, they trust us, and we build a great relationship with them. So they, when somebody from their team may be spinning out, or if they're talking to other founders that are seeking to create opportunities or build companies, like they say, hey, call MVP, like give them a call, they'll be there for you. So you think about just that alone, and then you hover data across that to see where should the next founder be building across the Midwest, or even how should we be analyzing how markets are changing and how markets are being dynamic on what's next. So we get intel from different avenues, different places, that gives us some insight on how and where founders should be building and what we should be looking for.
How about the Entrepreneurship Center at Carnegie Mellon, Schwartz Center for Entrepreneurship? Is that a good source for you?
Yeah, all the universities. That's you got to spend time at the university. You got to spend time talking to the folks the executive directors and directors who run those operations and build great relationships.
Right. Do you go to national conferences like TechCrunch or like South by Southwest, or come out to Silicon Valley much to see what's going on?
Yeah,
I've been a couple times a year.
Yeah,
a couple times a year.
Yeah.
So that's still useful for you. Okay. Yeah, I mean, Silicon Valley still has half the deals in the US. So yeah, but Sand Hill Road is definitely dispersing.
So for our firm specifically, we focused on companies based in the Midwest. Like, we know that, we intentionally go out and look for opportunities coming from Pittsburgh, Columbus, Cleveland, Ann Arbor. And that's where we spend our time actively. We know we're not lucky enough to find a great deal out of Silicon Valley where they, 500 other firms have passed over on it, right? So it's very valuable in terms of building relationships for follow-on investment,
Right.
potential, first customers. But as far as finding deals, it's not often we would do a deal, at least a seed round in Silicon Valley. For what
Okay.
it's worth.
Sure. What about investing in the metaverse? Do you have any are you investing in any software-based products for the metaverse? Or are you doing anything with the metaverse and blockchain? Because I noticed blockchain is one of the focus areas that you've listed as an area of tech investing for your firm. So what are you doing in that area?
So we certainly have a thesis, and we're looking for opportunities there. And
Okay.
it's the best analogy I can come up with is a couple of our other companies that are building business models based on embedded finance. I apologize, my associate standing behind me. Sorry.
Oh, I see. Well,
in the background.
I thought that was virtual reality there. It's such a beautiful view. It looks like a beach. You're on a beach or something. It looks like a beach in the background.
Not quite. I'm in the suburbs of Pittsburgh near a gas station. So not really. We're pretty far from any water.
I don't know. It must be an optical illusion of some sort. But yeah, that was a nice little break. Go ahead.
So yeah. So the as far as the metaverse, it absolutely there's a giant opportunity there. We always look for deals where you have a lot of lift in the sector and that we can get behind, where you can execute and then benefit from kind of the macro impact of the growing sector.
Right. Okay.
But as far as specifics, it's a lot like, and I think I kind of mentioned this before I got a little bit distracted, but with embedded finance, right? We have an investment in a company called AskAVC,
Sure.
which we invested in years before the term embedded finance even existed. So it's the reason I bring that up is absolutely we're very interested in it. As far as companies specifically focused on the metaverse, from our institutional funds, I don't know if we've done any yet. However, I can certainly see where it becomes applicable based on just, as companies innovate and continue to develop, there's going to be an impact there. Will, you may have some specific metaverse.
I think, we haven't been like early adopters in investing yet. I mean, you see, funds on the Silicon Valley and other places like New York have dedicated crypto funds, dedicated blockchain funds.
Yeah.
And that kind of, transitions into metaverse.
Right.
A lot of that is at the application layer, right? So we want to take, go a few layers deep and look at the infrastructure layer and some of the base layer cases and understand like where the picks and shovels. And to Zach's point about embedded finance, like that is a part of the infrastructure piece that we could look for. So maybe it's a vertical that we're looking at, from a digital standpoint, digital community standpoint, but how that community behaves, it could be much different than what we see in real life. So it's still a lot to learn there. We're still evaluating, but if we do, it'll be on the infrastructure layer and kind of like picks and shovels and how the movement and transactions and different type of digital tools that are needed to make systems go.
Right. Well, doesn't Facebook have its virtual reality labs there, or some research around virtual reality right in Pittsburgh?
Yeah,
they do.
I mean, Carnegie Mellon does too. It's a whole community. University of Pitt just started theirs. And some people are looking at retail. A lot of people are looking at sports. That helps us too, having the Penguins and the Pirates and the Steelers here. There's a lot of different places we can go as it relates to this. I mean, fan engagement experience. It's really can be an explosive market. We just have to get a little bit tighter on a thesis and where we want to sit. And there may be some adjacencies as well, but there's a ton of opportunity.
Okay. What about your connections in the sports world? Has that helped you as an investor?
Yeah, sports brings people together. You know, it brings community. I don't care if you don't watch a ton of sports. Somebody you know loves watching soccer, rugby, volleyball, basketball, track, football. You know, whatever it may be. But sports brings the worlds together, and it just connects us in ways that I think a lot of other industries don't. And you know, the way we can leverage that and, you know, trade information and improve the game for fans, or
Yeah.
you know, look at how technology is embedded into it. There's a huge opportunity to lever there.
So how did you get comfortable in being a venture capitalist? This is a new juncture for you, really.
You know, I'm confident, but you know, I think that I had to, again, like I said earlier, I had to get reps. You know, it's just like, you know, when you're a rookie in NFL, you're not all pro. You know, it's hard to be all pro. It's hard to be, you know, go to the Pro Bowl. It's hard to say I'm a starter. Like, you know, and even when you do start as a rookie, you're gonna make a lot of mistakes. You know, and that's just what it is. Like when you started off being a journalist, you grow up to be the chief editor. You know, day one. Like it takes time. It takes reps. You had to learn your style. You had to build an audience, and you had to be a great writer and, you know, a great researcher. And I think that's just how it works. So I spent time studying, researching, putting my money where my mouth is, and learning and being a sponge and growing. And you know, blessed with this opportunity to partner with Zach and our other partners to keep getting better. Right. You know, when I was in year 8 in NFL, that wasn't it for me. I had to keep getting better because there's competition. Right. There's people that's always trying to come after my job or replace me. And that mentality is still here, as the effort and energy that I put in to try to be a great investor, a great partner, and connective tissue in this tech community. So, you know, I realized that it was the greatest parallel to sports that I could find, you know, as a second act once I left the sports world. And, you know, there's so many similarities, and there's so many just connective pieces from sports to investing in venture capital that resonated with me.
That's good. And you had a mentor too, didn't you? Have somebody who was another football player who became a very successful venture capitalist here in Silicon Valley?
Yeah, I wouldn't necessarily call him a mentor, but it's somebody who really introduced me to the game, if you will, and
Okay.
took me on a few venture tours, and
Okay,
really
great.
exposed me to how technology transformed the world. And that was a good friend and former teammate, Ryan Neese, right? And he just, you know, he's been great, you know, in providing access. And I think that's what venture capital and this game is about, is, you know, the level of access that you can provide, not only from LPs to, you know, to great founders, but also how you bring a different community of people to get them exposure and access that could really, you know, go and dive into the industry, or find their way into the industry. So he provided that avenue for me, and I want to continue that legacy of providing.
And I know you're giving back to the community as well.
Yeah.
In Pittsburgh.
Yeah.
And other places.
Yeah.
So that's deserves a lot of applause.
Thank you.
Yeah, Zachary said that you are also a great networker, and he also mentioned that
much better than I am. He's much better than I am.
Oh yeah, okay. Well, he mentioned too that the two of you are the only VCs in Pittsburgh who are under the age of 55. Okay, so what's wrong with that picture?
Well, so one, we're excited to say, Rebecca, that has kind of officially changed to some extent. There's a new partner, Kalani Cook, with Black Tech Nation, which is, you kind of got stood up a little bit after we really spoke, and then Sri as well with Blue Tree Ventures. So it's, luckily there's more and more, you know, firms kind of being stood up, and individuals that are you know, under 55 getting in the venture world, right? Because it was a little scary for a while, where a couple, you know, vacation homes in Florida, and now there's no more capital available. So luckily that's changing. Yeah, it's and I expect that trend to continue. You know, I hope one day that, you know, we're Will and I are, as we get older, still under 55, but not for too much longer, right? Hopefully there's 50, 60, 100 individuals that would fit in that category. And I would not be shocked if that occurs.
Okay. Well, we saw a budding entrepreneur who appeared on your screen a little while ago. So, okay. Are there any industries or verticals that you believe entrepreneurs in the region, in your region, what do they call it, the Allegheny region, is that right? Are uniquely positioned to serve? Or like, you know, in Youngstown, for instance, you have people who were laborers, worked in the steel industry, and so they have natural talents. What about in the Pittsburgh area? Are there natural talents there? What are there particular industries that you see that entrepreneurs there are excelling in?
I would put, you know, the talent pool here in the Midwest on par with, you know, really anywhere in the US, you know, maybe anywhere in the world. The challenge can be sometimes where when you're building a company with a business model that requires burning through 20, 40, $100 million early on to really prove that you have something you can execute on, that can become difficult. There's not the depth of firms that can write checks to continue to support a business model like that in the Midwest. Not to say it can't be done. There's plenty of examples, but yeah, that's one thing to maybe look out for, which is maybe more of a negative than a positive. But yeah, I mean, there's a lot of depth in terms of skill sets in the region where, you know, we can't see why anyone here can't be successful on the same level as, you know, anywhere like California or New York or Boston.
Right. Did the remote working trend help Pittsburgh? Have you seen a lot of immigration to the city, millennials, new tech millennials coming in? For instance, West Virginia had this program to entice millennials to come back and live in West Virginia and become entrepreneurs. And Tulsa has the same program. What about Pittsburgh? You're competing with these other cities who also want this tech talent?
Yeah, I would.
Well, I think
We didn't have any incentive-based programs to recruit people here, but I think that when the fact that we have more venture funds in Pittsburgh than we've had in, you know, decades is really a tremendous support and credit to, you know, what we have here and investing in that talent. So we just got to do a better job of being a champion of what we do and what we have, and then building on top of that. I think that's the biggest thing, is like, we can't be shy about it. We can't be sitting around thinking that people are going to find us. We have to be active. We have to be intentional, because we, you know, it is a competition, right? If Tulsa's out and, you know, promoting and more entrepreneurs are moving there, or they're moving to Columbus because there's more venture capital dollars there. And not saying we can't go to those cities and invest in businesses, but, you know, we would love for them to build here, where we do have great assets. We would love for some of the corporates here to spin out people who want to build their own business, who have institutional knowledge, that can start businesses. I mean, we don't see a lot of that happening across the Midwest. I've seen a lot of that happen in Columbus. I've seen a lot of that happen in Indianapolis and Chicago, where people are leaving their corporate jobs to take on the risk of building something exceptional, right? And I think that we have to have more of that in more Midwest cities, instead of sitting around working your 9 to 5, going home, having 3 or 4 kids, and just being happy with, you know, the dog barking in the backyard and drinking your beer. Like, let's go build something that's going to transform the world, and we can do that here. So we need to see more of that, because the capital's here, and more capital will follow entrepreneurs that are excited about doing those activities.
Yeah, no, I'm thinking about Nationwide, for instance, in Columbus, where there's been spin outs from Nationwide Insurance. So that's a good example. And as you were talking about the competition too, I'm thinking about Drive Capital, which has had a major impact in the region investing, and from Columbus. And they've also done some deals in Pittsburgh. And you've also done some deals in Columbus. So there's a little bit of a cross-fertilization happening there. And that's probably a very good positive development. Any comments on Drive Capital?
No, I mean, I think, what they did a decade ago, and now they got 2 billion AUM, it's great. We need it. We need more of that. We need more of that capital to flow to create more entrepreneurship and create more businesses. So I'm glad they're here to do it. And then hopefully the companies we invest in early stage, they can graduate and write a $5 to $10 million check. So it's good that they're here. It's good that that we have some cross pollination.
Yeah.
And we'll see where it goes. So hopefully we can be the next firm that has a multi-billion AUM from there. And we see more of those pop up.
I'm sorry. Go ahead. What was that?
Yeah, and I hope we see more firms pop up that way. So.
Right. Right now, you're raising a new fund, and what are the challenges of raising a new fund in Pittsburgh? What are the challenges? What are the opportunities that you see with the new fundraising going on? Zach?
That's a great question. I think that's a tricky one to answer a little bit. It kind of depends on the demographic that you're speaking with. A lot of times we'll get investors that maybe we were introduced to on the West Coast or the East Coast where they think we're an hour from Philadelphia, and maybe we know they're kind of taking a call with us, but they're not necessarily overly invested or really understanding what's happening here, right? So one challenge with groups like that, which are probably the lowest focus we have, but is just educating them on what's really going on and all the opportunities in the region and why a firm where you can be really successful while investing in an area where there may be less deal flow, but there's also a lot less venture firms looking for them.
Right. And the valuations are lower as well or not?
Yeah, they're certainly lower on the average. I mean, the good opportunities, it starts to kind of even out. We tend to not be value-based investors in the sense that we are value-based investors, but we're not basing we want to get to a binary decision. Do we like this deal or not? And then we'll figure out the terms of the deal and the valuation from there, right? Because at the end of the day, it's all about upside, and there's nothing so ridiculous in terms of valuations where you couldn't. But yes, they're certainly lower. But
I think there are some unicorns in Pittsburgh. Duolingo, I believe,
Pittsburgh.
Unicorn.
Yeah, absolutely. And going back kind of thesis, cities like Pittsburgh, Columbus, Ann Arbor, they're probably the only cities in the United States where there's more unicorns than venture firms, which is kind of a unique aspect and kind of changes the whole game and the way you source deals and find opportunities.
Yeah, that's an interesting perspective for sure. Okay, let's see. Any other questions? I know somebody raised their hand a while ago if they got their question into the chat, maybe. Okay. Well, look, let me share the screen again and add a few more tidbits here as we move along. So I don't know. I noticed that Magarac Venture Partners. I actually like the Magarac name, and I detail that in my new book, Silicon Heartland, about Magarac. And here you could see Mr. Magarac, the steel worker. Can everybody see the steel worker? I actually took that photo near the last standing steel mill in Pittsburgh area. So I think maybe that is Mr. Magarac there, the Paul Bunyan type steel maker.
That is him.
That's him. Oh, okay, great. That's great. All right, and then as I mentioned, the steel mill and Will talked about earlier about Carnegie and Frick and Malone and all that. This is what the Carnegie Mill right here, the steel mill along the banks of the Allegheny. And as I said, I did a lot of road travel for the book, and that's a photo from the book in front of the last standing steel mill. Okay, so I mentioned Silicon Heartland, so it's on Amazon now, and there's the QR code for it, and you can go to Amazon and get it right now. And when I come to Pittsburgh on the road tour, I'll find it for you. Now, I started a Silicon Heartland online series of shows. Pittsburgh MVP is my second venture firm to be on the Heartland series. And next, we'll be going to Comeback Capital, based out of Ohio. They are pushing this whole idea of the comeback region. And I'll be speaking at their conference October 19th in Columbus. Then we're moving to Rev 1 Ventures out of Columbus on October 26th. Then Centrifuge out of Cincinnati, November 2nd. Then in your region, not too far, Mountain State Capital in Morgantown, West Virginia, November 16th. We already did High Alpha in Indianapolis. And by the way, we're recording this video, and we recorded the one from Indianapolis 2 weeks ago. So that's on our YouTube channel. You can check it out. For more info, you can see on my website here, Silicon Dragon Ventures. Now, for those who are not familiar with what I've been doing, we do have a membership club, and once in a while we'll do in-person events. I have 2 in-person events coming up, one in New York, one in Silicon Valley, and then I'm going to be doing the road tour for the book next year and doing events in all these locales. So if you join the circle, you can participate in all of this activity and meet more people like Will and Zach. All right, Will and Zach, any final comments from you to wrap things up? What didn't we cover that we should have covered?
For me, I'd say thank you for having me. I'm not sure if there's
Okay.
anything we didn't cover, at least with time left. And, Rebecca, hats off to you for, I know how much work you've done on this, and you probably built one of the most, well-researched, in-depth books on this region and what's happening. So, thank you for allowing us to be a part of it. It's really special, and I wish you nothing but the best.
Oh, thank you. This is just the beginning of the journey. So I'll be out there quite a bit and tracking what's happening, because I want to see how it develops, and I want to report on it and build from there. So Will, how about you?
Yeah, I would just say if anyone wants to reach out to us, look us up on Twitter and Instagram under Magarac Venture Partners or MVP. We're there, primarily Twitter. If they want to ask any questions, or if there's founders that are looking for funding, reach out. We're open, and we make ourselves accessible.
Okay, well, good. I'll let everyone know when I'm coming through Pittsburgh as part of the road tour, the book tour. So we can hopefully do an event with the MVP or CMU in the region and get a lot of entrepreneurs excited about starting up. Okay, well, thank you very much, everyone, for joining us. And we are going to be posting this soon. So this will have a lot more mileage than just today. So thank you, Will, and thank you, Zach. It was great having you on the show, and best of luck to you in your ventures. Take care now. Bye-bye. Bye-bye.